Although Warren Buffett gets more attention, let's be honest, George Soros has had an investment career of the same caliber. Hey there viewers, welcome back to another great video on our channel. Today, we'll look into 4 investing lessons from billionaire investor George Soros. So stay tuned and let's get into it right now. Markets are constantly in a state of uncertainty and flux, and money is made by discounting the obvious and betting on the unexpected. George Soros. To George Soros, these words are not hyperbole. Drilling down and gathering critical investment information and investing when others are divesting is the calling card of George Soros, one of the most famous financiers of the past half-century. George Soros is one of the most celebrated and divisive leaders of the 21st century. While he might not be a household name like Warren Buffett, he is one of the most successful investors in modern history. Having donated $32 billion to causes, Soros' current wealth is $8.3 billion according to Forbes. Besides being a billionaire hedge fund investor, he's also a Holocaust survivor, leading philanthropist, financial speculator, boogeyman of the far right, geopolitical counselor, founder of a world-renowned university, and so much more. Throughout his colorful life, there are lessons to be learned for investors aspiring to be successful. Lesson number 1. Balance realism and hopefulness. Michael Ignatieff explained Soros' philosophy to me quite powerfully. Isaiah Berlin once wrote, "History is no libretto, which means history is not a song of liberty." For Soros, you can't be a Holocaust survivor and tell yourself stories. Soros kept cold, clear-eyed realism. He strongly believes in open society but has no illusions about open society. Many of the philanthropic ideals Soros has fought so hard for have not materialized. Authoritarianism is stifling open societies around the world. His beloved Central European University was forced out of Hungary, but Soros stayed committed to the vision of the institution and practical to the reality of moving it to Austria. His support to his work has continued, enabling his institutions to live another day in the hope that one day they will accomplish their missions. Through it all, Soros combines historical realism and undying optimism. Lesson 2. Blend political and investment intuition. It might not even be an economic mistake as much as a scenario that can be taken advantage of. Some of George Soros' biggest moves were regarding currency speculation. Principally, he's constantly referred to as the man who almost bankrupted England. The reason for this is his bet against the pound in the 1990s. European countries were actively pegging currencies against each other in order to stabilize exchange rates. When Britain entered into the fray, Soros basically shorted the pound by borrowing British currency and then converting it to German currency in a bet that the British pound would devalue. The gamble paid off, and Soros walked away with a clean $1 billion in one day. By the time it was finished, he made almost $2 billion. It was most certainly a controversial move, as Soros benefited, but the country suffered. Before we move on, if you're enjoying the video, then do be sure to give it a big thumbs up and don't forget to subscribe to our channel. And while you're at it, don't forget to hit the notification bell to stay updated as we go on. Lesson 3. Speculation is a high-stakes game. If you're going to bet big, you had better be prepared to lose big. Though rare, Soros had some big losses. In 1987, he lost $300 million by incorrectly assessing that the market would keep going up. It was chump change though, compared to the $2 billion loss experienced during the Russian debt crisis. Of all of his losses, the worst was probably the tech bubble of 1999. While Soros was correct in assuming the bubble would burst, his timing was way off. He would end up losing billions. Obviously, George Soros has had far more wins than losses. Still, the lesson should be taken to heart. If you're going to take big swings, you had better be capable of handling the big misses. The kind of trading that Soros did is not for those with a weak stomach. Number 4. Learn from, be inspired by, and lead the best people. Soros founded multiple organizations, including his investment firm and its flagship vehicle, the Quantum Fund, the Central European University, and the Open Societies Foundation. His thinking is evident in the way he organized his network and his philanthropies. He founded talented people already doing the work and empowered them with resources. Soros then checked in on their progress and made decisions about whether to continue funding them. Over time, some of these contacts were able to share best practices they had developed with others. Relatedly, Soros has not only nurtured excellent contacts with a range of interests, but also created a network of networks. He created opportunities where people not only got to interact with him, but were able to connect and forge new partnerships with others in an ever expanding network. Can regular folks invest like Soros? It takes an immense amount of determination and it takes a lot of confidence, two attributes that Soros has in abundance. Once he makes up his mind, Soros often goes all in on a position, holding the view that no investment position is too large as long as it's the correct position. Perhaps the biggest takeaway from the Soros method is that you can't be too bold once your mind is made up on a market move. One of Soros' favorite maxims is, to be in the game, you have to endure the pain. For regular investors, that means picking the right broker or advisor and sticking with that broker/advisor, taking a trial and error approach to one's portfolio decisions and keeping